A sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital. Oh, not earnings roundup. We need to change the theme collection and go to live earnings. Live earnings. There we are. Nice. Okay, as always, your host of today is Julian. I'm very glad to have you in again. So one more time, like in the past 2 quarters, today we will back together the earnings results release of Alfen, the electrical hardware provider in terms of EV chargers, substations and energy storage systems out of the Netherlands, out of IMEA. But before we jump in, guys, as always, a quick disclaimer that in the upcoming minutes this will not be financial advice, consultation or whatsoever, and there's no guarantee for correctness of the provided data. Okay guys, as always, before we really get a little bit more deeper into the company, I want to just superficially cover what Alfen is about actually. And here you can see the website of Alfen. And Alfen, you can see it here, the electricity grid of the future, and you can see already their core businesses. So the legacy business is for sure the substations business, as you can see here, to basically increase or decrease the level of power, which is getting moving or transported through different pipelines and cables through Europe. Then the second newest one is EV chargers. It's roughly 10 years old since they rolled it out. And then the really rising star, actually rising star, but it dropped a little bit on the floor or even in some hole into the earth, into the ground, depending on how you view it, is energy storage systems. And let's take a look or a closer look what this means, how this looks in reality. So here you can see a substation, how it looks in reality. It can be smaller, it can be very, very large and wide that even doors are increased and you can step in it. Or here an example in Amsterdam, right next to the canals. So very compact one, almost hidden in some ad pillar. So different kind of substations are existing for different purposes, different sizes of projects. You can see you can attach them to wind farms, solar farms, to, for instance, here gardening houses, all of this is possible when we talk about those solutions. Then another solution are those EV chargers, and here we can see part of the portfolio, because I mean Alfen, based on my experience, because in general when we talk about their solutions, they are a little bit more focused on the premium customer base, which means higher quality but as well higher pricing. I mean, they not producing each and every single component of their solution in Europe, but at least the finalizing process, the factory process takes place in the Netherlands. And actually they have there several production facilities, and the newest one was just opened, I think in the first quarter and beginning second quarter this year. And what kind of EV chargers they are producing and providing, you can see very simple one without a screen, without any special features. These are their single S lines, so very likely for private house owners, for instance, who want to install them, or next to their apartment, or in the garage, in the basement. Those are those solutions. In ES, a single line Pro line is a little bit more advanced, but basically based on the principles of the EVE single S line. Then we're going in a even more proper direction when we talk about the EVE double Pro line, so based one more time on the EVE S single Pro line, but attached with 2 slots, 2 sockets to charge cars simultaneously compared to just one. And then we already move to the public and to the more sophisticated, more professional and way more B2B, business to business, than B2C, business to customer product portfolio. And this we will leave out right now, because this is what we will focus later on. That's the newest development and invention, let's say it like this. But here you can see really ones which getting installed very regularly in front of hotels, for instance, in front of companies. So It's still their retail. It's their retail. It's still their estate. Yeah, their property, the land in front of the building. So maybe they are not in terms of public violation when you physically hit against it or whatsoever. You want to damage the EV charger. They are not the most protective and strongest one, yeah, and solid ones. However, they're working very reliable and are very good prepared for all kinds of whatever weather conditions, for instance, yeah. And still, you can use them very, very often, very, very intense, and they are very reliable. And then we come to those who are getting installed more in the public sector, in public parking lots, for instance, installed by some grid operators, by a city, by an what kind of local community, yeah. And basically solutions which can utilize, you can see it here with cards, with apps, by using QR codes. Those are the solutions which are for the public business, and as well Twin 5 and Twin 4 XL are in addition to this Twin 5 Plus basically, yeah. As you can see here, 4 slots instead of 2, for instance. That is how the portfolio looks basically, yeah, when we talk about EV chargers. And now, last but not least, we talk about the energy storage systems, and they have two major solutions. You can see them here, the battery Mobile X and the battery elements. And the battery elements is actually very likely, I expect at least, this is the business case what you would think about battery storage installation, yeah. So those with the fundament connected cells and boxes getting installed next to wind farms, next to gas stations, for instance, next to all kind of different purposes to store battery, to store energy for on a long-term perspective, let's say this, for the full life cycle, for instance, of a solar farm, yeah. And to make sure that, for instance, in times where you can sell the regenerated energy for higher conditions, then you sell it, or you can provide energy in times where for instance, the wind turbine generator is not generating so much energy, but still energy is consumed. Then the charging net is utilizing the batteries in front of the wind farm to provide energy. Or another reason for energy storage systems to utilize those is basically to cover inconstant power supply, yeah, just because of some grid issues and some other issues, and therefore this kind of battery elements are as well very, very solid and experiencing a strong demand, but not only from Alfen, from a lot of players, not only in Europe, everywhere in the world. And then we have the Mobile X version, and you can see it here. It's integrated basically in a 5-foot container, so you can put it on a truck, for instance, and transport it quite simple from A to B. So you can use it for one-time events, like for instance, movie festival, like the film festival in Cannes in France. They utilize this kind of applications, or for instance, big fests, yeah, like music festivals with DJs and this kind of stuff. Or you can use them as well, what you can see on the back, when we talk about construction sites, so the vehicles on the construction site, whatever, some forklifts or whatever kind of machines are working there, they can be bought as well by those solutions, yeah. So this is basically the product portfolio. One more time, smart grids, which are substations, EV chargers, and then of course there's ESS, the energy storage systems. I mean, we all have a background of investors, and so in this regard, I want to quickly share with you the price development of the stock. You look like you can see it on the first glance. It looks, when we talk about the past 360 days, quite devastating, quite negative. I mean, the peak was even higher. You can see it IPO'd roughly 2019, 2020, and then it raised and raised and raised very, very strongly to a peak of 112 euro, because it's a company which is headquartered in the Netherlands, in Europe. And then afterwards it dropped heavily after 2022. I mean, that was a lot of companies peaked in this period of time because, you know, if the interest rate increased from this point in time, inflation was raising, and so prices raised. And you need to know that the overall business, no matter if we focus smart grids, EV chargers, or energy storage solutions, all of them, the customers are most of the time very highly affected with their projects in terms of interest rates. So when you think about that you're establishing wind farm projects, there are millions and millions of US dollars or euros or wherever you establish them, of money are involved. And most of the time the companies who are developing these projects and who operating them later on, they making money out of it, that those projects getting leveraged very, very strongly on a debt level. So they get money from bank institutions, for instance, or some other external investors, and for a certain interest rate, they pay this money back in the future, but they already generate some income. And this preload of huge amount of investment for this big projects, and of course an energy storage system, a substation, or sometimes as well an EV charger is a part of it, that will have that will get damaged very, very strongly, these plans to realize those projects as project developers and later operators in periods of high interest rates right now. So those projects and the overall demand was highly affected by it. There have been some other reasons why the stock dropped that heavily. Maybe we'll talk about this later on if we have time. I think in 18 minutes the results will be live and announced by Alfen, because most of the time they are quite on time, and on 6 p.m. European time, or how much is it, 12 p.m. Eastern time, so in the US for instance, they will be live. Yeah. Okay guys, but let's go on and take a look at part of it about the earnings number, even though investing is not .com is not showing this perfectly, but we can take at least a quite consistent glance on the revenue forecast and the actual achieved revenue, and you can see very quickly that the results are very, very mixed. Yeah. So sometimes they just covered the expectations, sometimes they beat it, but even a lot of times they missed it, and sometimes they miss it actually quite strongly. Yeah. So it's a very, very volatile company, not only because of when you take a look at the price chart, but as well when you take a look at the top and bottom line growth per quarter and per year. So that is what you need to consider. However, we're talking about a company which is achieving with an enterprise value of roughly 440 million US dollars, revenue at least last year of 560 million US dollars, yeah, full year, which is quite impressive. So that is way more below 1 when we talk about EV to sales ratio. So very, very good one, but you can see it already here. Management is right now expecting lower revenue development for the full year because of different developments. Yeah, and I will focus this in a moment. Let's say it like this. I will focus this in a moment, but let's go on. And here we have wait. Let me share. Basically, let me maybe share my PowerPoint chart, and you can see, I mean, for business reasons, for my professional life, I mean, I'm not a YouTuber obviously. So for business life, I was a few months ago in the Netherlands, in the Almere, in the city where Alfen is headquartered, and that is actually what you can see here right now in the background, is their new main production facility and new main office department and facility. And I was really happy, man. I was listening music. I was so happy to see this company in live, because actually it's, as I mentioned, it's 440 million US dollars enterprise value. It's not a heavy, large company, and sometimes it's just nice to see the companies what you are investing in. So I did some selfies, and good weather, everything was fine, very fine. I'm wearing my sunglasses, you know. even did a photo or made the photo of an Alfen charger in front of the hotel. I booked a accommodation at, and so everything is good. But then one trip later, actually, so 3 months later, roughly 3 months later, it looked like this. And why? Yeah, because of this heavy drop which took place, as you can see here, in June 26th. Yeah, and basically the stock tanked, I think, on one day by roughly, you can see it here, roughly 50%, a little bit less than 50%. Yeah, and since then it's quite flat, didn't move too much up to down. Yeah, and what happened? So now I can share it for you guys. I guess most of you who will watch this stream now or even later as a recorded version, they will know what will happen. You can see it here. They adjusted their full year 2024 guidance, and they want to even reassess their midterm objectives. When we talk about the midterm objectives, you can see it here, even if it's quite tiny. That is the Investors Day Annual Report 2023. And their midterm guidance was between 25 and 2027. We are striving to achieve an annual revenue of at least 1 billion euro and an adjusted EBITDA margin in range of 15 to 20%. Yeah, that was the target. I mean, 2025 to 2027, okay, is a big range. Let's keep in mind 2027 as a midterm target, 1 billion euros and 15 till 20% adjusted EBITDA, because when we compare it later to the now numbers, you will think, okay, what happened between this annual report of end 2023 and now? And actually, I'm still scratching sometimes my head and ask myself the same question. Yeah, and I can already tell you right now, I mean, I have not big doubt about the product portfolio, EV chargers, substations and energy storage systems. I have not big doubt in the market, into the potential, and that sustainable energy and companies who are active there are the future. Actually, I have no doubt, especially not in Europe, because they are funding substitutes and subsidiaries and this kind of stuff, or subsidies. Wait, I need to check it, this word. One moment, please. However, I can share it to you as well. What is it? How is it called in English? Subsidy. Yeah, subsidy. Subsidiary, substitutions, subsidy. So there are strong subsidies and funding programs accessible in Germany, and this alone, if they're getting more and more reactivated and companies and projects getting access to those buckets of money and budgets, I guess the demand will increase more strongly. And Europe really, I mean, I'm living in Germany, I'm living in Leipzig next to the Netherlands, for instance, and I can tell you that sustainable energy is a big thing. Yes, of course, not everyone over here is convinced by sustainable energy and by the climate change affected by us as humans. There are doubts as well in the community and in the population, this kind of stuff, and especially because of nowadays the elections in different countries and more populistic and more national focused parties getting more and more votes, yeah, by the population. Those parties most of the time are not big supporter of sustainable energy solutions and pushing this forward, let's say it like this. But however, I think even this is not an impact which is somehow deaccelerating this overall procedure and this progress strongly. However, guys, let's go on and talk a little bit about what happened actually when we focus this full year guidance adjustment. Yeah. You can see it here one more time, 26th of June in the morning, the news was announced. I was on a business trip, actually I was in Netherlands, and I didn't have time to react in any direction, but even if I had the time, it was hopeless for me, and it was not in my control to have any effect on it and sell quickly or whatsoever. But actually after Q1 2024 call, I originally wanted to already sell my stack. However, look what they mentioned. They mentioned that their big star, which is ESS, energy storage systems, that was the rising star where a lot of hope and potential was involved. They will not have a year-on-year growth like 40%, what they expected before this guidance adjustment year-on-year, which was already quite low when you compare it to the year before, because the year before in 2023 it grew by 254% year-on-year, the energy storage solutions. Yeah. So now they downshifted it from 40% year-on-year growth to 20% minus, yeah, reduction basically year-on-year. Yeah. Then they mentioned smart grid solutions. It was before, I think, on something like 20% year-on-year growth, and now it's addressed to roughly 5%, so at least positive, at least something. And this is what we stated here in this text. If you're interested, you can check it out by yourself if you like. But the EV charger year-on-year growth is now expected to a full year target of 8%. So EV chargers 8%, substations 5%, and ESS minus 20% year-on-year growth. That's the reality. And so everything decreased, everything. A few weeks after the Q1 results have been announced, without any note information, hint whatsoever, big doubt by the management. I mean, yes, in Q1 the management mentioned that on their call that they will backload a lot of decisions, getting rescheduled basically in backload to the second half of 2024. And in general for Alfen, 2023 was stated as a gap year because they expected, okay, they will have issues with the demand of their products because of this interest situation. You can see interest rate, for instance, actually here. And you can see it climbed up from 2022, as I mentioned, very, very strongly, stayed stable in the past months, and now it started to drop. So at least that's a good sign. But of course, reducing the interest rate by 0.25% is not making a big difference. However, and so they lowered everything based on different reasons. Substations, they mentioned, for instance, so the core business, legacy business, they mentioned, yeah, it's decreased because of some issues with moisture. So actually some new substation type with some, whatever, how you call this, liquid water inside. Yeah, so it has just some moisture issue afterwards, and so I guess it was somehow engineered in the wrong way, and they figured it out quite late, and now they need to change the production process, the planning process, and as well they need to adjust and change and fix the products which getting already installed. Yeah, so all of this costs money and this kind of stuff. And then another aspect that one of the suppliers who producing the cases, yeah, the surroundings of the substations, they can't, which is made out of concrete, solid concrete, very heavy solutions basically. They can't cover the missed product volume, which they missed now in the first quarter and the second quarter. So at the end, for the year, for the full year, they will just miss potential. They will not reach the target of 20% or whatever it was. It was roughly 20%. Now they will go only for 5%. And yeah, so that was when we talk about smart grid solutions. You can see it here as well. EV chargers, they mentioned the demand of EVs, yeah, electrical vehicles, is comparatively low, but they expect it will recover in 2025 and reaccelerate when prices of cars getting down, of EV cars, yeah, and this kind of stuff, yeah. So, and ESS, in general, ESS somehow, a lot of decisions get made later on. And I think ESS is, the energy storage systems, is definitely next to the management itself, because I don't like how they behaved in the situation personally. I don't like that, you know, you have earnings results and everything is more or less good, but you somehow, it feels already, some information was already not convincing, let's say it like this, and then a few weeks later, bam, like out of nowhere, hit in the face, everything get adjusted on a very high scale. And you need to know I mean, we can go on the news, but you can check it out by yourself. A few quarters ago, I think 2 quarters ago, they adjusted as well their guidance in advance of the earnings calls, and as well had a very negative impact on the pricing. And yeah, so I mean, story of it is that now when we check out the current situation of this company, and you can see here the earnings roundup of Q1 2024, my verdict was very negative. It was before this guidance adjustment already negative. It was before they have this news negative, and before they told backloading to second half of 2024. Now they expect a positive development in 2025. Okay, not sure how strong you can trust them. Key question is for sure from my side, is it now only 2023 a gap year, or as well 2024? Yeah, very likely, but what is with 2025? Can you really trust them? Can you trust their words? So a lot of risks, more heavier ones and less heavier ones, and as well chances actually are now existing when we talk about this business. Yeah, I mean, I'm not sure if it's low valued. Actually, it's not, I think, a bargain or something in the steal. That's not the case. But if they come back to old growth speed, yeah, momentum, if they really can accelerate their growth and go back to this actually profit, revenue growth momentum company, if they can achieve this level, then there's really strong chances involved from my perspective. But for sure, management, for instance, as I mentioned, it sounds awkward, but for me, this is the strongest uncertainty. And so I did a specific episode about it. You can see it when you go on my YouTube channel. You can go down to bonuses episode. You have the bonus playlist, and you can check it out by yourself. It's a very long episode, but I'm covering all kind of aspects which I had in mind, which comes in hand with this new guidance and what I'm considering as chances, risks, and other aspects, let's say it like this. However, let's go back to the PowerPoint slide deck, and you can see here, that was basically my assumption, and I stated it here very clearly. And again, no financial consultation or advice or whatsoever. Alfen is a very, very risky bet. Yeah, maybe it's fair value, maybe not. Maybe there's some potential, but it's definitely risky, no doubt about it. You don't know if they run out of money or something like this. Yeah, it's a small company, and again, things are not working that fine. And the worst thing, it's not in their control, not in their hand. Yeah, interest rate needs to slow down, the demand needs to increase, and they need to win contracts. They need to win tenders. They need to convince their customer audience. And if that's not the place, that all of this is not worth anything. However, I expected, because of different kind of developments, that the price from now roughly 15 euros, 16 euros can go back within a year to 100% up 30 euros. Yeah? I think that's actually realistic. Hi, colleague Lawn Mover Man. Thank you very much for having me in. I'm a little bit ill or sick or something like this. Not sure what is really going on. So don't wonder if I'm acting a little bit powerless. But maybe Alfen can make it happen to charge up my engine one more time if they can surprise us as investors. But let's see. This is the call I'm emotionally most distanced, and I expect really not more than nothing. I don't expect anything from Alfen. I have still actually 9,000 euros invested, which is roughly 10,000 US dollars, and it's not a low amount for me. You know, I'm not a very rich guy or something like this, but really that is for me high risk money, and if it's gone, I will sleep very, very bad a few nights, and my holiday next week will be a bad one. Because I have way too much time to think about my bad decision to invest in the stock. However, I think still from this point in time and the situation Alfen is positioned in, I guess there's really an upside. Hey, is tomorrow roundup day? All of your portfolio, which ones are doing okay? Tomorrow is a stock news day actually. Yeah. if you mean this. So tomorrow I will not talk about my portfolio whatsoever. I will talk just about the companies and the newest information and updates about them. Yeah. So I think there are very, very, very interesting information involved. For instance, when we talk about Hims and Hers, I don't want to always put into the headline and the titles of these videos Hims and Hers, Hims and Hers, Hims and Hers, because I think it's already achieving so much attention in the market. Actually, yes, it deserves more. It's as well my favorite stock I'm invested in, but I think it's not everything about Hims and Hers, and even a small player like Alfen right here can dig some potential as well. Maybe, guys, let's check out. Okay, results are live. Results are live. I don't even know if I want to open the document. Maybe we should just cancel right now this whole session here, switch off my camera and everything is done. Close this chapter. Sell the stock and amen. However, before we jump in, I want to share one more aspect, and that is, as always, the prepared Excel sheets to really dig a little bit deeper into the numbers. And when we talk about Alfen, everything will be actually about just a few key numbers, and basically that is revenue and that is profitability. So we take care of the revenue development of the three core businesses: EV chargers, substations, and energy storage systems. And in terms of profitability, we just take a focus on adjusted EBITDA margin. Actually, the case is they're not offering so much information. Yeah, they're not granting the strong level of transparency what you could compare to a company like StoneCo, for instance. Yeah, which offering so many kind of information is already almost too much. Alfen is quite the opposite way, and I like this as well, not very much, and of course that's affected heavily as well by the management. And so again, another aspect why I'm not convinced that strongly by the management. But let's see what they bring in the future. Yeah, maybe I'm wrong, hopefully I'm wrong, and then it's fine. But when we talk about those core numbers, you can see it right here. Revenue, you can see here the quarterly revenues for the past years. This is 2024. Then we have, let me go back, 2023, 2022, 2021. And I have different additional parameters I've inserted here in my table. And we have this kind of setup as well for the profit side, let's say it like this. And when we talk about revenue, look, I mean, they have announced a full year guidance of 503 million US dollars. Euros. Everything is in euro, guys. Keep this in mind, please. In euros. 503 million euros. And they already announced like this 8%, 5%, and minus 20% year-on-year growth, or growth reduction actually. So I calculated it with the last year full year achievements. And so this is the full year expectation. And then we have something here which shows how much they already covered of the full year expectation, because everything is for me about this full year expectation and of course information which they will communicate during the call tomorrow morning. The call will be very, very important at this thing. I think the analysts in the past quarters always ask very, very critical, serious questions and confronted the management with those questions, and that always brings a lot of truth to the surface. Yeah? So, however, for me today, it's just important that they cover best case a high stack of revenue, which is expected for the full year, and best case would be really 50%. If they can achieve with this today first half earnings results release 50% with the different solutions, which I don't will expect at all will be the case. I expect really there will be some other stuff maybe. Because not that it happened, not that I think it's that likely, but I just mentally I'm now set up like this. I'm not calculating or assuming anything good and getting surprised positively. Maybe you see me smile in a moment. However, to achieve this 50% covered revenue expectations, you can see it here. We want to see EV charger revenue of 48 million, substations revenue of 43 million, and ESS, energy storage revenue of 42 million. So everything, you can keep it in your mind, roughly 45 million. And when we talk about profit, they're expecting a profit, adjusted EBITDA margin for the full year of roughly mid-single digit numbers. So I used 5%, calculated as well based on the revenue. And and you can see it. Yeah, you can see it. And this would result, I mean, they already achieved actually 10 million adjusted EBITDA in the first quarter, what is not that bad, but this was before the guidance adjustment. And this was 9% adjusted EBITDA margin. But now I'm calculating with 2.5% because then they would be on a level of 12.5 million adjusted EBITDA, which would be 50% of the full year adjusted EBITDA margin. Yeah. So one more time, adjusted EBITDA margin, I would be happy with 2.5 million euros, not margin, adjusted EBITDA, 2.5 million euros. And when we talk about the revenue of the different product portfolios, always 45 million for the quarter, but they will announce it as full half year, for the full half year. So we will need to deduct it. Yeah, we need to calculate out the first quarter results. Guys, then let's jump in it and yeah, let's see what will happen. Let's say it like this. Oh man. Okay, there we are. The good thing is I don't know what will be the revenues that I expect or I want to see for the different product categories on the half year base. Yeah. So let's see. Okay, 245.7 million. First of all, doesn't sound that bad actually. Doesn't sound that bad. Maybe the stock is already rising in the background. I will not check it out. I trust my hands here. I'm not checking really. But I could imagine it's already increasing because you can see it's a stronger first half than compared to last year. And that is almost 50% of the revenue target for the full year. So I can, okay, you can see it here. You can see it here. I want to already mention, you can, some of the product lines somehow increased heavily, and maybe with this backloaded results they didn't told any lies and it's working better than expected. So first glance revenue looks actually, because I didn't have any expectations, awesome. So, let's go on. Group adjusted gross margin, okay, it's a little bit lower than last year. Yeah, not gross margin after one-off course stands at, yeah, okay, some one-off course, blah blah. I'm ignoring this stuff. That is not interesting for me. Okay, that looks actually good. But that is, it's 1 million more than I want to see. I want to see 12.5 million. And now they have 13.5 million. And they stick to their single-digit adjusted EBITDA full year margin, at least right now. So yeah, it's way lower than last year first half, but still on a solid scale, yeah. And at least, I mean, I think really, as I mentioned, if all of the 6 companies I'm invested in, and I never met any of those managers, but really, Alfen management, I'm sure they are highly qualified, and I'm sure that there's a reason why they're sitting in their chairs and I'm sitting in this chair, yeah. So I don't want to sound overconfident or something like this, yeah. But I never have seen a company in my life, and yes, I'm not that old and not have years and years of experience as an investor, but I never have seen earnings results where the management that often missed the guidance and the forecasts, in positive and in a negative way. In a positive way as well. In, I think, what was it? 2023 actually. They made 70 million less than expected. Yeah, 570 was guidance, 500 roughly was achieved. The year before, they achieved 110 million more than I expected. The guidance was 350 million and they achieved 440 million. Yeah, so it can go in both directions, you know. So that shows the business itself is not just worse or whatsoever, but maybe it's because of the management, maybe because it's because of the business. And it's so heavily affected by seasonal effects, so heavily affected by interest rates and political decisions, subsidies, funding programs, whatsoever. So basically external decisions, what they can't affect. But it's a mess. Okay, let's see what they have mentioned here as well, because interesting actually is for sure the midterm guidance 2027, the targets. Then the financial situation, they have discussions, I think, with bank institutions and investors to make sure they're financially stable. So let's see if they add some information about this. And of course, in general, the restructuration of the company. I mean, I guess they will get rid of a certain level of headcount. They hired a lot of new staff members in the past quarters. They opened their new production facility, which was way larger than the old one. And so they have very high fixed costs. I think they definitely will restructure different kind of stuff. And in general, I think the company celebrated good successes in the past, in the near past, and maybe you're getting a little bit tired. And at this point in time, I think at the management, you need to create a little bit a new momentum, you know, inspire the staff, create new processes, create new agendas and strategies to really improve the situation, yeah, top down. Okay, what I mentioned here is Alfen has started a strategy validation and organizational right sizing project and will continue the assessment in Q3 2024. Alfen will communicate an update on progress during its Q3 trading update on November the 7th. Okay, this is something what I really like, because really I'm missing this kind of information, and I think that's worth a lot. So I mean, look, when you are an investor and you're not hearing anything from your company, especially when they're sailing through rough sea, yeah, with rough weather conditions like Alfen is doing it at the moment, when you hear nothing, you think that's bad, that's a bad sign. And I think that's right most of the time. So I like that they clearly state here, okay, it takes a little bit more time when we talk about the overall situation, but they will keep us updated, and in less than 3 months, I guess more transparency is existing. Yeah? So they're heavily working on it. Okay, here now we're talking about the financial situation. Alfen obtained a preemptive waiver up to Q3 2024 for breach of the bank covenant. In Q4, Alfen will continue the constructive conversation with the bank to conclude an update covenant based on a revised business plan in which our organizational right sizing effort has been taken into account. Yeah, so basically, because of this overall very, very negative development, and I mean, guys, the truth is Alfen needs to accomplish a turnaround story. In turnaround, many companies in the past tried to achieve this. At achieving a turnaround and making things way better than they have been in the past or in the present, most of companies failing at doing this. So let's see if Alfen can achieve it, yeah? I guess, again, I think really it's a serious player, it's well connected, it has still quite good reputation, even though not everything is working perfectly. And I think they're really suffering, like a lot of other companies, yeah, like Solar Edge, like Enphase, like a lot of different players in this in the sustainable energy market, renewable energy market. They're suffering under those overall economical conditions, yeah, primarily interest rate driven. And so I guess this is not an exception, but I still think Alfen can make it happen. Okay, now we talk about the CFO. I already see Onno Klapp. Alfen Supervisory Board has decided to appoint Onno Klapp as the CFO and steering board member per 1st January of 2024. Okay, that is... Wait, I need to translate it, honestly. I really don't want to miss this information, because Nice. Okay, that's nice. That's good. That's really good. Because it's exactly what I expected with my low level of English skills. That okay, they will. I mean, they had an interim CFO, I think, in the first quarter of this year, and actually, both sides decided to not extend their relationship, their business partnership, the professional relationship, and so this interim CFO, actually, which should stay there for longer time, that he left, and then this one, Ono Club, was this interim CFO, and I guess they will keep them, and this is, I think, a good sign. I think that's a good sign. First of all, they're achieving stability. They keep this guy who's covering this transactional rough period. He knows the past situation, he knows the present situation, and maybe the future one. He can make this turnaround happen, maybe. I guess they are convinced by him. That's a good sign as well. And one more strong indicator is that Ono Cup himself is. It seems like he's convinced by Alfen, yeah. So if he would leave right now after a few weeks, I would think, oh shit, there's really some awkward stuff going on in the bushes. So yeah, let's see. That's a good sign. So they really push a lot of very nice information here, I need to tell. Okay, they're reconfirming this revenue outlook. Okay, this EBITDA margin outlook, yeah. Yeah, that is okay. I mean, I'm happy it's not getting worse. Okay, I guess now we go into a little bit into the numbers, and then we check out the rest of the details of this press release, yeah? So first of all, I want to add here this number. When we talk about EV, is this EV? Yeah, EV charging equipment revenue. So 80.1. Let's go back. Let me see if you can see it. And there it is. EV chargers. So I expected a higher number. So EV chargers already the business part, which is sucking a little bit, honestly. But on the other hand, that shows that substations and energy storage systems grow way stronger than expected. So you can see here, year-on-year growth is 25%. That's not the case. Come on. Is it true? Yeah, it's true, I guess. Yeah, so EV chargers, you need to know that 2023 was primarily gap year because of the EV charger segment. And so, because that tanked heavily, basically the customers, all of them ordered already their EV chargers, ordered a lot of stuff after the supply chain issues resulting out of the pandemic situation in 2020. Afterwards, when the supply chain recovered in 2021, 2022, a lot of the customers of Alfen ordered and backloaded EV chargers as hell. So the inventory positions grew very strongly, and then in 2023 there was kind of a yo-yo effect basically, and the demand shrinked strongly. And so it's not actually that surprising that it's growing compared to 2023 in terms of EV chargers, because it was very weak, but that it's growing 25% year on year. That is actually quite strong. I guess really the stock is up. I'm very now curious to figure out if the stock is up. We will see if, I'm not sure if you can, yeah, let's see if we can see the price after market, but I guess it will be up. It will be up. That's really strong from my perspective. Okay, then not because of EV charge, but because of all informations which have been communicated right now. Okay, so we go to the substations. Substation, we want to see 98 million, and I guess it could be even a little bit higher then. You see my mute is already getting better. How much I want to see? 98. Oh, it's less. It's just 94 roughly. However, still 9% year-on-year growth. That's strong. So then I think energy storage systems surprised. Did a big hit. 93.5 and really backloaded. So let's go back to the Excel sheet and put it in 93.5. And I mean, they say 9% first half year-on-year growth, and I just focus here of second quarter, so don't, yeah, it makes perfect sense that it's minus when we just take a look at Q2. And you need to consider as well that they have this moisture issue, that they had some production and sales stop basically in terms of this, I think it called Diablos substation, if I remember correctly. Yeah, they are really diabolic. The name is perfectly selected. Yeah, however, so I think that's still okay considering that they had this kind of heavy moisture issue. And now ESS, and now I'm ready for a surprise. So what I want to see here for the first half is 65 million to cover 50%, and I guess it will be a little bit more at least. And that is a lot for second half actually. That means a lot for second quarter results. Yeah, it's 72.2 million. Guys, that's tasty. That's tasty. 70. How much was it? 72.2 million. Woohoo! Okay. So maybe some decisions actually have really been backloaded. Okay. So we can talk when we talk about the revenue. You can see it already here. I hope you can see it. Yeah, you can see it. Full year coverage, as I mentioned, 50% was my wet dream, let's say it like this, yeah, to cover the full year expectation. That is not really realistic, at least from my point of view, but I never expected it if it takes place first of all from EV chargers, then from substations, and from ESS I didn't expect at all they will make it happen, but it's completely opposite way. 55% is covered by ESS already for the full year revenue expectation, 47 substations, and EV chargers 46%. And guys, I mean, yes, it's not the banger. Yes, you can see substation growth reduction, yeah, or basically less revenue compared to last quarter revenue results. But however, it was a 50% quarter year-on-year growth in terms of ESS, when we really dig behind this first half numbers, and EV chargers was solid as well. This both I rate for sure. Whatever, for instance, Lone Mover Man will tell in the chat, but for sure I will rate it positive, because it's for me very, very surprising, and I'm very, very happy with this. Doesn't mean that the year will end well. It doesn't mean anything. Who knows how the decision will be made in terms of purchasing energy storage systems in the second half of this year? Who knows it in Q3 and Q4? Nobody knows it. Really nobody. But however, that is light at the end of the funnel. And when we talk about the company, which is priced as a company which is basically like, it needs to have a turnaround, it needs to make a turnaround. It's really has strong issues, financial issues, all of this kind of stuff. And still it can have, yeah, no doubts about it. But that is the first indicators, these are the first indicators that it's looking good. And substations, I rate it, what should I do? Maybe I rate it neutral or negative. 47. I rate it neutral because I really think 13% in second quarter 2024 year-on-year growth, negative year-on-year growth, yeah, it's, or the decreasement basically is really okay in terms of this moisture situation. Okay, I think so. Overall revenue, I will give it a green rating actually, because of the surprise aspect, because this kind of magic trick happened, what I stated at this title of the stream. Yeah, so it's a little bit the tendency to yellow, and who knows what will be next quarter. But right now, I guess the market will be happy with those results. I can imagine. Yeah, even though it's still. Overall, 49% is only covered from the revenue guidance, but I expected a higher hit, actually. And I guess that substations will add quite reliable value in the second half of the year. At least I expected that this kind of supply chain issues with this concrete housing provider and this kind of stuff will get better, and if it's getting better, substation demand is strong in Europe, is strong in the Netherlands, and the 4 countries they are active in, and I'm convinced that could work out very well. So good stuff actually on the revenue side, guys. And here actually you can see when we talk about the margin business, yeah, just that you have seen it one time. So EV chargers are high margin products, substations are mid margin products, and ESS storage systems are low margin products, just that you've seen it once, yeah. So now we take a look at the adjusted EBITDA, and I mean they mentioned already it's 13.5. We can check it out one more time together actually. Go back and go down, it will come somewhere. Here it is, 13.5 million for the first full half year. Yeah, of course it's decreased compared to first half of 2023, but still, and it's not strong when we take a look at the adjusted EBITDA margin. But what I want to love to see here is this, at least a neutral or positive number. That would be somehow something positive. Yeah, if you expect nothing, that would be positive, and they pushed it a little bit stronger than expected. So when you take here, take a look at the full year coverage, they already with 54% in terms of adjusted EBITDA margin covered, and more than 110% and about adjusted EBITDA margin. Yeah, so yes, full year growth very negative, but that looks good as well, guys. I mean, that's not the big surprise. I'm satisfied with this. It's not like I want to judge about this like I talk about the revenue. I not evaluate this or rate this as positively, but still a good one. Still a good one for sure, man. So let's to make it clear like this and like this. Yeah, not so far, not so bad, I guess, guys. I mean, that are for me the major information. And the first sheet of the slide deck of the press release looked already very well, but I expect they will show a little bit more interesting information, because it's not just the first quarter press release, but as well for the first full half. So they're adding a little bit more information, even though sometimes it's a little difficult to work with those information. But however, let's go through it. So far, so good, guys. But it's not the end of the stream. So what we have here, yeah, year-on-year growth, gross margin. I like that they're stating it. I'm not sure if they did this in the past. So I like that they're providing now more transparency. I like this very much, because that is what we need. We need that this kind of trust into the management, trust into the company, trust in the numbers, and trust into the future of this company. That is what we need. And they need to communicate more. They need to communicate more my perspective in details, and I like they're doing this right now. Okay, market momentum is very different per country. Okay, there you can, yeah. Then maybe it's not just that's reasonable, because I mean in some countries like the Netherlands, when you drive there in the public infrastructure on the highway, yeah, on the roads, you see so many EV cars, and then there are already a lot of EV chargers, for instance. And then there are markets like in Germany where it's the share of EV cars is quite low. So here's way more potential to reach higher levels of EVs and of course of EV chargers. Yeah. However, okay, they're mentioning some slow market growth development with less visibility. Okay, so they're stating it by themselves. They have issues making forecasts. Okay, and that is something. Okay, it's a good source here when we talk about this information, but with a CAGR, so a compound annual growth rate. And they mentioned this already in the 2023 Q4 quarter earnings release documentation, that they're expecting this kind of yearly growth rate. I don't give an F about it, you know, to tell you the truth. We need to see that Alfen make it happen, yeah? I always expected Alfen will grow stronger than the overall market, like what you can see here, those expectations by this institute. But right now, 2023, they're not making it happen. 2024, maybe there's still a chance left. I don't think so. However, let's see. Yeah. However, yeah. Then, and they stick to their assumption that 2025 business will recover. Okay, that everything is fine, nothing to surprise. Singly, revenue we already covered. Yeah, we have this moisture issue. What I've already it's not. It's called Pecto Station, not Diablo Station. Sorry for this. Not that was a misinformation. However, what I've mentioned that the revenue was impacted by it, and just 13.5% when we compare Q2 2024 to Q2 2023. So minus 13%. That's for me, considering this situation, absolutely acceptable. And they're focusing here as well, the margin, lower end range, okay. But you can see what I've mentioned, mid margin business, high margin business, and then we come to ESS, which is the low margin business. Moisture issue update. And actually, guys, I want to add here one more information as well. What I didn't like about this moisture situation is they mentioned in the first quarter earnings call in the press release there will be a one-time 5 million euros spent or cost situation because of this moisture issue, and then very likely they will cover it. I think they even announced this through a news in advance. And then in the second quarter, in this news update, they mentioned it cost something like 11 million or something like this. Yeah, I think this one, if I'm not mistaking anything. Yeah, guys, make sure you do your own due diligence. Not sure if this information is correct, but I guess it was. Or at least it will cost way more than 5 million. And I mean, yes, for a big company, it doesn't sound that much, but for a small company like this, you expect 5 million, and then it costs something like 10 million, is 100% more. 100% more. And a company like this, especially in these bad times, they need money. And to get this money back out of the operational business, 5 million is not that easy. Yeah, so I didn't like it at all, but let's see what they will communicate right now. New builds production is up and running. Okay, great. Okay, looks good. Wait, rebuilds is spread out from now until, okay, good, installed stations, repairs has started, but will run into next year. Okay, it takes, I guess, more time than I expected to solve these issues, cover these issues. Okay, and they used less, just roughly 10% of the money what they put in their pocket and separated from the rest of the budget for solving this issue. So maybe some money will be left actually later on, yeah? I don't get it, I don't expect it, but however, okay. So that is not 100% positive from my perspective. That looks good, that it's running and going well right now, but repair work takes some time, and yeah, let's see. Week by week, to the end of December 24, to more than 100 substations a week. I have no clue, honestly, guys, how much is 100 substations a week. It sounds like a lot. And what I know, first-hand information, believe me or trust me or not, that really, when we talk about the infrastructure of substations in Europe, in every country, but especially as well in the Netherlands, they have such a high demand to step up their game in terms of infrastructure, power supply, grid supply, electrical grid, and substation is part of it, a big puzzle piece of it, and the demand is crazy strong through the different grid providers. So I guess 100 substations a week, it sounds like a lot, because I expect a substation will cost something like, what I expect, something like 50 to 100,000 euros or US dollars. So that is definitely some kind of revenue potential. And yeah, nice that they're accelerating it. And now we come to the falling rising star, the former rising star, which is now a falling angel kind of, but somehow it's recovering, I guess. Yeah, it's significantly loaded towards second half. Oh, okay. Wait. 2023 growth one in the first half, as 2023 was significantly loaded towards second half. Yeah. Okay. And guys, just one information because it just dropped in my mind, and that is what I already strategically talked about before this call. If they push out good results, and I'm very satisfied with those results actually. If they push them out and the market is not appreciating those results in terms of the price will grow tomorrow with 10% up, if it's not growing by 10%, let's see. But if the stock price is stable, it's like this tomorrow, yeah, after those results and after the call, let's see what will happen in the call. But after call and everything stays as it is, and sounds for me at least optimistic and okay, then I will purchase further shares, very likely. Just for $1,000 US, $2,000 US, something like this, because I purchased already for $4,000 US a few weeks ago after this news. So I'm quite heavily invested. However, but I expect actually, I would not be surprised if the stock price growth in a very low two-digit frame, like 10 till 15%, would not surprise me because it looks okay for me, really. Okay, however, but at least right now, honestly, guys, nothing has been achieved. Yeah, so that's not even halfway through the situation. There's still so much more which needs to be done, and there's no need to clap right now in the hands and celebrate. Yeah, that's not the right time right now, but let's see. Okay, let's go back and not check the price. I checked the YouTube actually, if someone is watching, and I'm happy that still someone is watching. I guess it's Lone Mover Man. I would not be surprised if Lone Mover Man would be my mother or something like this, or my girlfriend, who tries to keep me motivated by doing YouTube and always join every stream and give me likes and whatsoever. So, nothing against you, Lone Mover Man. Actually, the complete opposite. I'm very happy that you are that loyal. But sometimes I think, man, who are you that you're always watching my streams? I'm very happy about this, actually. Highly appreciate. But however, let's go on. Yeah, we have here some information about the margin. To realize a fair gross margin. And that's nice to see because I think because of the competition out of China, not substations, not EV charging, none of those products, they, I guess, experiencing that heavy competition out of China, out of this region. But I think energy storage systems getting a lot of competition out of China because they can really produce mass in terms of energy storage systems. The same like Tesla, for instance. Tesla might be as well a serious competitor. Not sure how present they are in Europe. I know that they are rolling out projects in UK. But yeah, definitely some competition is going on here. I have that's the situation when we talk about ESS. I have not that big doubts that they will recover in terms of substations and EV chargers. Yeah, but I'm not sure about ESS, about energy storage solutions. Yeah, that how good they will recover in this direction because of this heavy competition. But I like that they mention okay, margin is existing. Yeah, 22% gross margin. It's not even that low compared to substation. Yeah, quite low compared to EV chargers with 38%, but 20%. It's nice that they're not losing money by each sold ESS product. Yeah. So the backlog looks sufficient. Okay, and the backlog of the signed projects is 72 million. You need to know that when we talk about the revenue, what they can really communicate as revenue during the earnings releases is revenue which is not just signed by an agreement. You know, I mean, look, they have different milestones in their agreements. These are big tenders a lot of times, you know, so maybe 10% after signing the agreement of purchasing some ESS solutions, then 20% for ready deliveriness, then when 20% more when they get shipped to the customer and so on, and when they get installed, a few more percent of the getting invoiced of the overall order volume, and as soon as they're getting commissioned, the solutions, the last whatever 5 or 10 or 20%, yeah. And so that is, I guess, what they're talking about, signed projects and 72.4 million backlog. So we can hope the best for the last 2 quarters of this year. And the you can see here, they even signed in till mid-August. So in the past, it's now July and August, in 1.5 months, they achieved turnover of 16 million. When we talk really about signed projects, if I understand it correctly, and that is 16 million, doesn't sound so well, actually. That is, if I understand correctly, this difference between 72 million and 88 million in 1.5 months, 16 million, and that doesn't look that great, actually. Okay, I think that's something not that good. However, I don't want to overweight it, because a lot of other stuff sounds okay, but just I think that is not convincing that so many new contracts haven't been signed in Q3 so far, if I understand correctly. They will share backlog on quarterly basis. Love it. More information one more time. We see momentum in the market with a funnel of qualified opportunities that has considerably increased in value compared to a year ago. Great to hear. And so now they're showing some, I guess, some highlights in terms of their project pipelines and their business relationships with some customers in terms of EV chargers, smart grids, and energy storages. And that they want some big ones. You can see it here with Drivey, 500 charging points, for instance. OP Charge, I think that is one of the major partners. Actually, I read some news 1 or 2 days ago. But you can see 7,000 charging points. Nice to see. And yeah, I mean, smart grids, they have this long-term agreements going on, midterm agreements about high level of volume of substations. So they are, in general, don't have a big doubt. But wait, that's new. Annexes is nothing new for me now. What is this signed? A 2-year framework agreement with Belgian public transport company Tech to deliver customized walk-in station for about 50 fast e-bus charging locations. That is what I like to see, because I don't know this tech company, and nice. That's good. So something in Belgium, not just in the Netherlands, because most of the time in news are always addressed to the Dutch market. With multiple compact stations. Okay, greenhousing. Yeah. I mean, they're promoting it already in their posts and this kind of stuff since months. So I guess customers happy and they want to roll out more. And let's see, energy storage with a 20 megawatt system at the wind farm in Vemstenberg. So I guess somewhere in the Netherlands. Then another one which is double the size in Sweden. And another one which is half the size of the one before, or even a quarter size. And where is this? As well in the Netherlands. Yeah, okay, somehow I guess these are larger projects for them. Otherwise they wouldn't set a focus on it, and that sounds good as well. I mean, it's okay. I mean, the EV chart, that sounds great. That I mean, that's most convincing for me, because it sounds like large numbers, even though of course they need to sell thousands and thousands of EV chargers to achieve high million euro revenues. But that sounds that as at least the EV charging customers coming back and are interested in their solutions. That's great. Okay, innovation update out of 3 business lines. That sounds as well very nice. Alfen step project with a Dutch technical university and a Dutch grid operator into the solid state transformer substation. Okay, some awkward technical stuff. I'm more a commercial guy, but it sounds like some innovation is going as well when we talk about substations. AC charging station. Okay, that's nice. They announced it already, but I mean, there are now new requirements here, new requirements by the EU in terms of how the charging stations should get designed and what kind of functionalities they need to offer, like ad hoc payments, so just price transparency, that it's just more accessible and more customer friendly to use, let's say it like this. And there are different kind of regulations in this directions, and I think Alfen is the first provider in Europe who providing this kind of solutions to cover those requirements. Yeah, okay, that's okay. Okay, what do we have here about ESS? Okay, Alfen has become the first mobile storage system producer with a fire propagation certificate for mobile X, for the mobile version. And I mean, it's not that it's not relevant. It's relevant that you have this kind of stuff. I mean, look, if you have good people there, yeah, let's say, for instance, you want to sell it, or you have a tender, whatsoever, you're participating, and other players who are providing ESS and mobile battery storage solutions participating as well. And if you can make happen to convince your potential customer who is publicating the tender, and with different kind of requirements in it, if you convince them to tell them, look guys, it's important that you have this kind of fire propagation certificate, because that only makes it secure to use it. Guys, I tell it right now to you, but later don't come back to me if you purchase from a Chinese company, for instance, storage solutions, and then you got issues with fire and bad news and whatsoever. Then don't come back to me. And if they can convince like this, that can really be a USP, let's say like this, yeah, and really make a difference. And everything is fire safe. Yeah, at least they try to make a differentiator, achieve a differentiator to competitors. That is what I like to see. Okay, I mean, we talk about the financials. I will not go too deeply into the details. We covered already adjusted EBITDA. You can see a small adjusted net profit, at least something, and a little bit of adjusted EBITDA. Okay, personal costs. You can see it here. That is when we talk about cutting down costs in terms of staff members. Yeah, you can see it's way more than the first half of the past year. So they hired way more staff, and yeah, I guess now they here and there need to get rid of them. Actually, even that's not a nice development. It's great as well. Very negative emotions at the existing staff, which will stay at the company, because everyone thinks, okay, will I get fired and removed maybe or something like this. But I guess firing staff members in this situation, you need to do it very likely, maybe. Not sure. I hope they can somehow avoid it and just accelerate their business very quickly. And however, but not sure how realistic this is. And you can see other operating costs as well, quite high. Again, new facilities, production facility, and this kind of stuff. So yeah, that's not matching perfectly when we talk about the revenues they're achieving nowadays. But that's nothing new if you watched the stream in the past minutes. Okay, personal cost increased compared. Okay, that's everything what we have already seen. Income statement, first month. Okay. Net profit is negative, so they're losing money. That's nothing. That's nothing surprising, let's say it like this, from my perspective. We can see it here now. When we talk about headquarters, you can see it here in the manufacturing facilities in the first half, what they opened. Yeah, you can see that the assets are increasing, this kind of stuff. Yeah, and okay. Outlook. Yeah. An interesting aspect I completely missed, but they already talked something about the outlook at the first page. Okay, and they mentioned 2024 looks good, and that is what they state here one more time. Yeah, so 2024 expectations are in line, and very likely they will achieve them. I mean, they are not high, as all of us know, but at least they make it happen. Bank wafer to make sure they're not running out of money. They will keep us updated and they will take care of it. Was already stated the first page. Okay, what is here? Related to the organization right sizing, Alfen expects one-off restructuring costs to occur in second half of 2024 with cash flow outflow mainly in the first quarter 2025. The extent of this cost is dependent on the outcome of revised business plan, organizational right resizing. Yeah, I guess so. When they, for instance, fire staff members, they need to pay them some money for this kind of stuff. Yeah, all of this costs money. This overall procedure. But it's okay to invest money in this point in situation. I mean, if they not change anything, maybe the business will not exist anymore in 2 years. This risk is real. Yeah, it's still real, of course, but I like that they're doing this. So it is, and it will be very interesting in the upcoming quarters to be invested in Alfen, or at least to back their development, yeah, their future. Yeah, I guess. Sometimes it's better to stay away to be invested in Alfen because it's pain in the ass sometimes right now. But I guess one more time I'm a believer in this company. Otherwise, I would not be invested, even though I have doubts in the management sometimes. But you can see there is some potential. And last aspect, long-term, Alfen continues to anticipate positive market developments for all of its business lines. With the anticipated further growth of the business, Alfen plans to further invest in its people, production, and innovations in a balanced manner. And everything is fine. I believe this to them. I mean, look, guys. At the end, it's one more time. I don't think they have full control over it. Yeah, the visibility, as they mention it in terms of their EV charger product line, it's kind of limited. Yeah, it's all about the demand. It's all about when their customers will make decisions. If they keep prolongating, rescheduling, or how is it called? When they keep pushing the decision dates into the future, yeah, their customers, in terms of purchasing batteries because wind farms projects doesn't get realized, or solar farms, or what photovoltaic, or whatever, what kind of projects, yeah. Then they can plan as good as they want. They can't change their destiny, their future, yeah. But at least what I like is they work on the things they can affect, and that is again for instance the structure of the business, yeah, the number of the staff, the structure of the design of the processes, and it sounds like they're taking a focus on it and they're taking it serious. I want to share one more time in the bonus episode when we talked about the future development I'm expecting. Look, guys, that was my stock price roadmap, and one more time, it's really stupid and silly to do this kind of stuff and share assumptions like this in the World Wide Web, because who knows what will happen today. Maybe they push so bad numbers that we experience a complete difference. However, we are still in advance of this actual roadmap, but I can imagine we go now closer to 25 euros, more like 20 euros, more like actually maybe 18 euros, 17 euros, something like this I could expect will happen tomorrow. Again, one more time, 10% up would not surprise me. But if they can make it happen somehow, that they communicate in the third quarter, everything is back on track, we are financially stable, I guess that will have a big first impact on the market. Then I expect somehow a correction of the midterm guidance of 2027. I still think 1 billion euros revenue for full 2027 is realistic, but they need to accelerate very, very quickly. And they can even surprise, this yo-yo effect can go up in the positive. It bounced back in the negative, but now it can go up in the positive, yeah? So it would not completely surprise me if maybe 2025 will be something like a 600 million euro revenue year, 700 million euro revenue year, and the next one will be already a 900, 2026, and 2027 will be something like a 1.2 billion or something like this. 1.1 billion. I don't want to push too hard any desires in you. And one more time, half hour ago, I told you I don't expect anything from this company, and it's a very, very risky bet, and it stays that it is. But that is, I mean, I assume any kind of scenario from best case, base case, worst case. Everything can happen here from my perspective. But the realistic case, I think I see a fair chance, especially when we take a look at today's valuation of the company, which is quite low. And then I expect that the interest rate will reduce way more, and then really the demand starts to increase in 2025. And then I expect that somehow they will correct in the mid of the year the guidance for 2025 and raise it, actually, not decrease it, the opposite of what happened in June this year for 2024. And that would result in a price which may be something like 30 euros. It's really a rough assumption, really dumb whatsoever. But that is just a scenario what I have in my mind. Yeah. However, when we really talk about the overall today's result, I rating this one. I rated it already. We already shared it together. Positive. Neutral. So go back. Neutral. Substations revenue development was neutral. So we have this neutral, this green, and overall, I mean, revenue is way more important for me than just EBITDA in this regard. Actually, because it's a surprise and because I consider a little bit the price in the background, I put it, and because of the information which was provided so far, I mean, we will see what will be the earnings call, and in the future I will share as well an earnings roundup and consider as well the call and the information in the call, and check out one more time the press release with a little bit more time. However, because it was surprisingly good, I rate it as green. Yeah, I rate it as green, and this is what I need to add as well here, and there is the arrow which is missing, and now it's officially green, officially being pinned. Okay, so that looks good. Is there anything else I want to share? And look one more time, maybe this. That is when we talk about the price. Yeah, so you can see the valuation. It is actually 2 weeks old, but it's more or less on the same level here. Please take a look at the first row where Alfen is stated, and you can see now, okay, growth is not high. Expect for full year again something like, I guess something like 5 or 10% or something like this. But maybe there's a surprise when we really talk about 2024, 2025 expectations, and it can come back to this revenue growth state, and so 23% could be a realistic scenario from my perspective. And in terms of numbers, I've checked out the current the EV sales. The current one is already very, very low, higher sales than enterprise value. Actually, as you can see here, it's very, very small, but roughly 400 million enterprise value and roughly 500 million sales. So below 1, and it can get even lower if the price is not increasing till 2024, 2025. Everything here is expected. PE, I'm not calculating with anything, with a positive one or something like this. But however, in terms of a fair price multiplicator, which results out of it, and yes, a lot of potential is considered here, a lot of hope as well, and it's kind of a mix of a base case scenario. It's definitely not a negative scenario. If it's negative, it will result in a whole mess, in a whole other situation, and then all money can be gone very quickly with what is invested. But however, if it happens like this, with from my perspective, kind of realistic till optimistic numbers, it might be a very, very undervalued company compared to other stocks you can see here. Yeah, so that's definitely something. And now finally, one zip, I checked the price. Not sure if I can have a look in the aftermarket conditions. wait, let me share the screen. But let's figure out together if you can see it. And again, one more time, I expect something like 10% up or something. Ah, no, it's not live. It's not 100% live, the price. I'm not sure, maybe you can check it out somewhere else. Wait, maybe I can try it here at Yahoo Finance. I'm not sure if it's working like this. No, I think there's no, after the market has closed, and that happened, I think, 2 hours ago, roughly 2 hours ago in Germany or in the Netherlands. Yeah, let's see what will be tomorrow the case. But guys, I'm at least really positive surprised. Yeah, I'm kind of positive surprised. Yeah, I mean, I rated it positively and I stick to it right now. Let's see what will happen with the earnings call, considering the earnings call. And let's see what will be the outcome of it if I check it with a little bit more time. But all I can say, man, look, I stated this episode, Alfen stock is the magic gone. Because I think Q1 I called it the magic electrical triangle, EV chargers, substations and energy storage systems. And for a certain period of time, I think the magic was gone. It was out of Alfen stock. But I see a chance it's coming back, and I see that when we consider the pricing, it could be a chance to make some money, or at least to invest into a very interesting scenario and learn a lot out of it if it's not working out well. Yeah. But guys, one more time, it's truly a risky bet. From out of my 6 stocks, for me, I feel it's the by far most risky bet, but still a lot of potential existing. Can be a very strong outcome, what nobody expects. And as soon as the market, you know, if ever step with your mind 2 years ago in the situation, yeah, when interest rates have been low and everyone was just spending, companies invested, but people bought every EV, electrical vehicle they could get, this kind of situation, yeah. If that happens, and nowadays EVs are cheaper than 2 years ago, Chinese companies like Build Your Dreams are coming to the market, Tesla lowering the price, all of this kind of stuff is going on. If this demand is increasing, more EV chargers getting installed. Simply like this, yeah. Private, on the private side as well on the business side. Substations, again, establishing wind farm projects, solar farm projects, this kind of stuff. All of this costs a lot of money, and you're leveraging this a lot of times. You're getting money from investors. You're not realizing those prospects. You postpone them because of high interest rates. Yeah, if they're getting lower, bam, box is tickled. The demand can come back to higher levels, and the same for energy storage systems. Same, absolutely the same. Energy storage systems and substations. Yeah, and substations in general, I don't have the big doubt. They have this mid and long-term, long-lasting agreements, tender agreements with the big electrical grid providers, you know, power companies, energy companies. So here, I in general have not that big doubt. But it stays risky. Big risk comes with big chances, and big chance comes in hand with big risks. There's always some kind of a correlation existing. Yeah, in some situations you have relatively good chances for a fair price, and sometimes it's the opposite way. Actually, you have big risks and you still pay a lot of money for going through to this risk-chance ratio scenario. But however, I liked what I've seen today. I see it as light at the end of the funnel. And so guys, just a quick outlook in terms of what will happen in the upcoming days from my side. So tomorrow I will go one more time live and sharing with you the stock news of the companies I'm a shareholder of: Alfen, Grab, Himsenhurst, New, Sentinel-1 and Stoneco. Make sure you're not making miss this episode. I will do an episode very likely from September on each week, and that will be my new major format, new major type of episodes, because I like to see this. I think it's very important to be always up to date about the stock and the news which is going on, the interesting one, let's say like this, the crucial ones. And that is what I will try to provide by doing those stock news episodes in the future. And tomorrow I will start one more time. And then next week we have on Tuesday, the 27th of August, we have SentinelOne, Endpoint Protection Cloud, an identity cybersecurity company out of the US. Let's see what will happen with this company. My first earnings call and first time I'm backing this. I'm not a cybersecurity expert, so I hope I'm not messing up too much during this call. If you know me, you know that I'm already quite challenged with my regular companies. I'm invested since months and months and still I'm struggling sometimes. However, it is like it is. Guys, if you enjoyed the past 1.5 hours, 1.5 hours? Yeah, 1.5 hours. Guys, please feel free to leave me a like to the stream and to this video and leave a subscription to this YouTube channel. You can follow me as well on X, on Instagram and Reddit to be always up to date. I will share my latest news, share opinions about them more and more in the future. I did it already in the past. If I purchased stocks, if I sold shares, that is what I'm doing there. It's my device for communicating with you guys. So yeah, make sure to follow. And in general, guys, thank you very much for joining today. I hope it was a pleasure for you and you are satisfied. Lone Mover Man, thank you very much one more time for utilizing the chat and being interactive with me. Highly appreciate it. Thank you very much for the 2 of you who are now still live at the stream. Highly appreciate this as well, or the one who's left actually. And yeah, make sure you join tomorrow's stock news episode. And in general, guys, no financial advice, no guarantee for correctness of the provided data. And one more information, as always, most important, I think, is health. Take care of yourself, stay healthy, and enjoy life. Yeah. See you the next time. Cheers. All the best. Bye. A sense of capital.